please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome to Business Lunch. I'm Nisha Podar and with me as always is Sonia Shenoy. Sonia, good afternoon. And markets, what a yo-yo movement we have seen and post-budget, not just the budget being the key data that the market is really taking cues from, but clearly the markets have been shaky. But today, away from the lowest point of the day, but still some of the stocks are really showing a huge amount of resilience and strength. ITC as well as Bharti Airtel really giving that huge amount of support, and from the banking space, State Bank of India is also contributing to the markets holding up. But Sonia, the biggest point I would like to make here is that even though we will keep seeing recovery and then probably a fall and a recovery and buying at lower levels, but overall trajectory for the market is going on the downward slide.
Oh yes, it is. It's too early to call this a recovery. It's just been an intraday pullback, I guess. And let's see, we still have about a couple of hours more for trade, so there could be some selling pressure on the higher side as well. But it's really what's been happening across the globe that has impacted our markets. So around the globe, it's been a sea of red as Asian markets have been trading with huge cuts, almost 600 points gone on Japan on the back of weak trade on Wall Street. Remember, the Dow closed with more than a 660-point loss, the biggest loss that we've seen since the Brexit day, that was 24th of June. Europe is also expected to open in the red amidst the huge global sell-off. Investors are now keeping an eye on the political developments like coalition talks in Germany, election results in Cyprus, and news surrounding Brexit.
All right, and take a look at that. IRP is interim resolution professional, and that has something to say on the Jaypee case. And Jaypee Associates submits 550 odd crore rupees before the Supreme Court. That's an important development coming in from the court action today. And Ashmit Kumar, who's been tracking all that very closely, joins in with the latest. Tell us, Ashmit.
Well, to first put things in context, as far as the IRP and the bidding process for Jaypee Infratech is concerned, today is the last day for receiving LOIs. Today is the last day for receiving bids by interested parties as far as Jaypee Infratech assets are concerned. Now, on account of that, and given that today was the hearing, the scheduled hearing, Jaypee Infratech, in fact, appealed before the apex court to stay these proceedings, to stay the bids that are being furnished, and to stay the entire process as of now. But what comes in as a setback for them, the apex court as of right now, not deeming it fit to grant any stay order, not deeming it fit to stall the insolvency process before the IRP, has given the IRP the liberty to proceed with the bidding process. The bids shall be allowed to continue without any hindrance. That's one direction, key direction coming in as far as the apex court is concerned. Another development as far as Jaypee Associates is concerned, keep in mind that as a fallout of this entire Jaypee Infratech issue, the Supreme Court had directed Jaypee Associates to furnish a sum of 2,000 crore rupees. Mind you, that's Jaypee Associates, the parent company of Jaypee Infratech. As of today, Jaypee Associates informed the apex court that they've submitted 550 crore rupees. Meanwhile, the amicus in this entire case, and amicus is a legal officer assisting the court in the case, today apprised the court that while the amounts received by Jaypee Associates is about 550 crores, the claims of home buyers that have been received against Jaypee Associates is 1,150 crore rupees as we speak. So that's as far as Jaypee Associates is concerned. But as far as Jaypee Infratech is concerned, complete liberty to the IRP to continue with the bidding process as planned. Back to you.
All right, Ashmit, thanks a lot for giving us that feedback or that update there. But let's move on. As the Finance Minister Arun Jaytlee completes almost 4 years in office, Network 18's Editor-in-Chief Rahul Joshi caught up with him to talk about the various schemes that he announced in the budget, including that 4-letter acronym long-term capital gains. Listen into what he had to say.
जेटली जी, इस बजट का गेम चेंजिंग ऑफर जो था, ये नामो कैर के रूप में आपने इस वक्त सामने रखा है। आपके ऑपोजिशन पार्टीज का कहना है कि ये इन्होंने सिर्फ एक जुमला है, सिर्फ 2000 करोड़ इसके लिए बजट किया है। अब सुनने में आया है कि आपने इसमें 12000 करोड़ रुपए की बात की है, तो ये एडिशनल 10,000 करोड़ और कहां से आएगा?
देखिए, इस बजट में मैंने एडिशनल रेवेन्यू मेजर्स की बहुत गुंजाइश रखी है। 24-25 लाख के बजट में से 10,000 करोड़ निकालना कोई इतना असंभव काम नहीं होता। स्कीम शुरू की जाए उसके लिए 2000 करोड़ का मैंने प्रावधान किया है, लेकिन एक बार उस पर जब ज्यादा साधन चाहिए होंगे तो हम बजट में से देंगे। अब जो मैंने 1% सेस लगाया है, 11,000 करोड़ मुझे वहां से मिल रहा है। लॉन्ग टर्म कैपिटल गेन जैसे ही आगे बढ़ता है, पहले वर्ष में मुझे 20,000 करोड़ की उम्मीद है, और अगर दूसरे तीसरे वर्ष तक हम पहुंच जाएं तो जो एग्जेम्प्टेड इनकम थी
जी
वो 3,67,000 करोड़ थी लास्ट ईयर, तो 10% के हिसाब से 37,000 करोड़ तो वही बनता है। तो इसलिए अगर सरकार साधन चाहे तो साधन इसमें जुड़ सकते हैं।
Don't lose heart, the market has definitely recovered from the lows of trade, and there are many good quality stocks that are seeing buying interest right now. Ashok Leyland, case in point, through the course of the day, Ashok Leyland has seen buying and now has moved to the highest point. There you have it, 2.5% higher. Jain Irrigation is giving it some company. So Jain Irrigation too in the last half hour has seen some pickup in action, now 3.5% there. So since we're talking about gainers, the biggest gainer on the index is Bharti Airtel. It's up almost 5%. Let's get to the bottom of this. Prashant joins in to tell us what's really happening here. Prashant, over to you.
So what's essentially happened is that Singtel is putting money into the Bharti group, but where it is putting money is important. I mean, the structure for Bharti is something like this. There is Bharti Enterprises, which holds stake in Bharti Telecom, which in turn holds stake in the listed entity, which is Bharti Airtel. Singtel is putting in money into Bharti Telecom. In which Bharti Enterprises holds 50.1% stake. Bharti Telecom in turn owns 50.1% stake in Bharti Airtel. So the money is going into Bharti Telecom, which means that the money actually is going to the promoters. That is the important distinction one has to make. The money is not going to the company, and the company will not have access to these funds to use it as it may please. It is going to promoters, that is Bharti Telecom. And Bharti Telecom may use it to retire its own debt. I mean, it had raised funds to subscribe to the rights issue last year, etc. But as a result of this particular transaction, what is going to happen is that the effective stake of Singtel in the listed entity, which is Bharti Airtel, will go up by about 0.9% to 39%. Remember, the Mittal family, the promoters, hold effectively basically around 27% of the company. So Singtel, if anything, has consolidated its hold over Bharti Airtel, which is the operational listed company. This transaction, in terms of any other impact, doesn't have any other impact in terms of operational change or how the company is run, nothing at all. But it is an investment financial transaction which has happened, and I think what the market is doing is it is taking this investment as a stamp of confidence, which is coming into Bharti at this point in time. Back to you.
All right, thanks Prashant for highlighting that. Of course, that remains as the top gainer on the Nifty 50 stocks today. But of course, Singtel, we know, has been increasing its stake and has been opportunistic in the market as well. What's really not doing well is Vakrangi, and that continues to fall in trade, locked in the lower circuit of 10% today. And we spoke to the management as well to find out what's really transpiring today earlier in the day. And he said that all the allegations of manipulation are baseless and that no formal agreement was reached between Vakrangi and PC Jewellers.
We have not received any communication either from Stock Exchange or Security and Exchange Board of India. The rumors of involvement of company in price and volume manipulation are completely baseless and factually not correct. Before we tying any tie-up, we do the soft pilot. And post-successful pilot, we do the formal agreement. So in the case of PC Jewellers, we had a soft pilot in the certain outlets, then we do the soft testing in all the outlets. After successful of the soft pilot, we do only formal agreement. When we start the soft tie-up, we have to put the logo in the outlet also, not only the presenter. Till now, we don't have the formal agreement, so we remove the logo.
Okay, well, let's talk about some numbers now. Kalyani Steel just came out with their numbers a while back. The profits have fallen by 10%. The revenues are down also by 2.7%. And the EBITDA performance has also been hit. R.K. Goyal, the MD of Kalyani Steel, joins us now to take us through that. Mr. Goyal, thanks for joining us. Your margins have fallen on a year-on-year basis to almost 14.5% versus 19% earlier. Can you give us a sense of what happened in this quarter and what is the expectation as far as the operational performance is for the rest of the year?
Good afternoon. First of all, margins are under pressure basically because of increase in raw material prices, including coking coal, coke, iron ore, graphite electrodes, refractories, etc. Looking at the total increase in the raw material cost, it was a much better performance than what we had thought of. And going forward, I think we'll be able to pass on some of these increased costs to our customers. So we expect situation to improve further.
Okay, so can you tell us how much would you be able to pass on to your customers? And do you think that in the very near future, iron ore prices have topped out, or is there more to go?
You see, as far as iron ore prices are concerned, it is at the sole decision of NMDC, and which is followed by all private miners. Even though globally iron ore prices are coming down, but NMDC is continuously increasing prices in last couple of months. They've increased the price ranging between 800 to 1,000 rupees on lead basis per ton, including royalty and all, in December and January put together. If there are some such decisions by iron ore miners, then it is very difficult to say. Otherwise, logically, we should be able to pass on more some of these costs to our customers, and we'll have better performance.
In terms of realizations, Mr. Goel, how are you positioned right now and how the price is panning out?
You see, we are much better as compared to last quarter, because in December we could get an increase of around 4,000 rupees, and we are expecting further increase now.
Okay. And what about met coke prices? What were they like in this quarter, and what's the average that we're looking at over the next, say, 2 to 3 months?
You see, met coke prices are definitely much higher as compared to last quarter, and we expect it to get stabilized now.
Okay. So given everything that you've told us, should we expect the margins to be slightly under pressure even in the last quarter of the year, purely because of the way raw material prices have gone up?
No, margins should improve technically, basically because we are expecting a price increase from our customers. If that happens, we will definitely have much better margins.
So just one point of clarity, Mr. Goel, you are saying that your realizations will really offset the kind of cut that you see because of the higher raw material prices in the present quarter.
We are looking at that.
Okay.
All right.
We'll leave it at that then. Thank you so much for giving us your view on the industry as well as on your numbers. That's Kalyani Steel, margins under pressure in this quarter. Look a tad lower than what the street was estimating, but let me quickly read out what the revenue numbers are. 3071 crores is what they've reported as far as the revenues are concerned. The expectation was 3040 crores, so it's largely in line with expectations as far as revenues go. That would be a growth of around 14% for Bosch on their top line, around 13-14%. Actually, Bosch last quarter was quite weak for Bosch, but this quarter they've done a bit better. But they did lose some business to the Tata Cummins JV last quarter, and that has, impacted their revenues. But otherwise, this is not bad on the top line front. I'm just waiting for what the EBITDA performance has been this time. Remember, we are expecting a margin performance of almost about 15-odd%. That's a 14% revenue growth. Yes, that's in line with expectations. The profits are slightly lower, but nothing really to worry about. Net profits coming in at 281-odd crores versus 218 crores same time last year. In terms of realizations, this time around we are expecting the realizations to improve because of higher passenger vehicle sales, and the new BS4 parts have higher realizations as well. Okay, 54% growth in the EBITDA is what we're looking at 447 crores. All right, so that 470 crores was the expectation, and 447 crores is what has come in. So, these numbers are not too bad, but they are slightly lower than what the street was estimating. The expectation was that the EBITDA would jump by almost about 75% or so. I guess this time there has been, a little bit of an impact as far as the margins are concerned. But let's just wait for more details. Okay, 447 crores EBITDA versus 470 odd crores. There's been a big increase in raw material costs, and that impacted the numbers last quarter as well, Nisha. Now, because of the transition to BS4, they have had to import a lot of goods, in terms of raw materials, because they are moving from BS3 to BS4. So that transition has impacted their margins a bit. It happened last quarter as well, and this quarter too, EBITDA margin slightly lower than what the street was estimating. So if you look at the margin chart, this quarter about 14.5% margins, last quarter 18%, the quarter before that about 16.5%. So it's been a transition phase for them when they have to transition from BS3 to BS4 for all their clients, and that has involved a bit of cost, and that's the reason why their margins have been hit a bit this time around.
And also the raw material costs going up. So the two reasons for the margins taking a hit, and that's why that stock has also reacted negatively and is down 0.33% as we speak. All right, so that was about Bosch numbers.
Sorry, I'm just trying to get, I'm just trying to get a bit more details on what their employee expenses have been, because last quarter around the employee expenses had gone up quite a bit because of, you know, some provisions that they had made. So I'm just trying to understand.
So while Sonia looks at the employee cost, let me reiterate that Bosch's numbers, the margins have been lower, but it has been a transitional phase for this particular company. In the last few quarters, they've seen the slide in the margins, and this time it's definitely lower than what the market was expecting as well. And that is more because of the raw material cost and the transition accounting as well. So both put together, that stock has really taken a beating because of the numbers that have really come out. 0.31% down on those numbers, and whether the employee cost has also added to the pressure coming in on the company's margins, it's to be watched out for. In fact, that number is something that we are looking at.
No, you know, the sales volumes have been pretty good in the mobility solutions business. So they have mobility and non-mobility. In the mobility solutions business, they've outperformed the Indian automotive market with a 17.8% growth. I'm just reading out from their press release. That's very positive. So the management says that this quarter, the positive result on the top line was achieved on account of higher sales volumes. And the personnel cost has actually improved for them. So it's lowered. But taxes have, there's been a marginal increase in the effective tax rate. So, you know, that's what's really impacted their bottom line, and that's the reason why the net profits are lower than what the street was estimating. But I don't think these are bad numbers at all. Of course, the market sentiment is weak, but otherwise these numbers look decent. Revenue growth of 14.5% is what you've seen. The EBITDA growth of 55%. Some of their pockets like mobility solutions have seen, you know, high teen growth of almost 18% and outperforming the Indian automotive market. It's just the tax expenses that have hit the bottom line for them this time around. Otherwise, good numbers.
All right, so nothing to worry about, but that stock has taken slight bit of beating, recovered from the lowest point that it had touched right after the announcement. Now let's move on then in an interactive session with Ministry of Finance today. Hasmukh Adia, the Finance Secretary, said that the STT rate remains to be at 15%. Let's listen in.
The security transaction tax is a very small tax per transaction. And the income that we get out of it is very, very small. It's only 9,000 crore. And I would like to believe, although I don't have the exact data, that there are more number of short-term transactions rather than long-term transactions in the stock exchange. And so the income of this 9,000 must be coming more from short-term transactions rather than long-term. And we have made no change in the short-term transaction rate. We have made it 15%. It remains at 15%. In spite of putting a nominal 10% tax on long-term capital gain on equity, it still remains a very subsidized regime, both in terms of period of holding, which is 1 year instead of 2 years for all other classes of assets, and in terms of lower capital gain tax rate of 10% instead of 20%, which is there for unlisted equity as well as for immovable property. So it still is a subsidized rate.
Okay, that's the word coming in over there. But just want to leave you with the chart of Bosch, because as we said, the numbers are looking good. And the stock has actually started to recover now. It's up almost about 1%. Good revenue growth, good margin performance, and double-digit growth in their mobility solutions business as well.